Hi guys, welcome back to our YouTube channel. It has been a while. Nevertheless, we are back now with a banging video. So guys, it's your favorite girl, Mumsy and
Melandaka, and from now onward, I'm gonna be using my short name, which is Kele. So it's Mamsi and Kele.
Kele. So from now on, it's Chelete Talks with Mumsy and Kele. How do you guys love that? So please comment down below to let us know if that's a really dope name, because we're trying to finalize and rebrand our channel. So comment down below. Before we jump into this video, let's ask them to
subscribe
and please hit the
notification bell so that you can get notified every time we upload a new video.
Don't forget to like our videos, comment so that you can interact with us, and also share with your friends and everyone. Please, people, don't be stingy, share the whole damn thing.
Yeah,
I'm joking, just share it.
Yeah.
Okay,
so today we're going to be talking about something specific, and it's related to what's currently happening, as you all know, about COVID-19 and the economic impact of COVID-19. There's a lot of uncertainty around what's going to happen, how long it's going to last, and with regards to a lot of countries, like in Namibia in particular, the government has declared a state of emergency in the country and a partial lockdown, in which two of the major regions across the country has been in lockdown, meaning Erongo and Khomas region. With that, it came to the government defining certain businesses as critical services, and everyone else must either shut down completely or try and work remotely.
and with this said, with this implementations that the government has put in place to try and minimize the spread of this virus, it has unfortunately affected these businesses financially, as businesses have to close their doors, and the economy has also been affected. Now we are going to talk about how did this whole COVID-19 affect our economy, how did it affect our businesses and also individuals.
Yeah, so just to start off with the basic ground level, the first people that were asked to close down were the open market or informal market sellers. And basically those are your people that live on a day-to-day income. It's not your people that have savings, it's not your people that have salaries, so it's actually people that just make sales and
so that they can survive every day.
So those guys are closed down. So you can imagine, if there was bread that was coming at home every day from mommy coming from the open market, all of a sudden there isn't bread anymore. And it has been this shutdown has been met with a lot of retaliation. People are asking the government, what are they going to do? How are they meant to feed themselves during this time? And some governments, like the government of Rwanda, has come up with an initiative to deliver door-to-door food to people that are affected, which is quite of a good initiative. But unfortunately in Namibia we don't have that much intervention from the government yet. So
yeah, but even though we don't have intervention from the government yet, we have our corporate businesses that are coming through. Like today, it was published that MTC came through for the people living in informal settlements, and they personally delivered packages to the people at their doorsteps, which was quite a good initiative. And we still need more people that are going to volunteer to do such things, because we don't know how long this is going to be. And for people that really live from mouth to mouth, they really need our help.
Yeah, and I think one of the other things that we can just highlight is the government trying to make water accessible for everyone. And I've also watched the news over the weekend where they've said they're going to reopen water taps for free in Windhoek, and certain municipalities were also going to reconnect residents whose water was cut off due to area debt. So there's so many things that the government is trying to do to help to help households deal with the impact of economic changes that are arising from COVID-19.
And the other changes that we can see is, as you've noticed in the shops during the past few days, people have really been spending on food and just stocking up supplies. And we're just going to talk about how does this affect our spending, how did our spendings change, like personally, how we're gonna share stories, how it also changed our budgets. As we talked about that we have specific budgets, but how does this also now change your budget, and how can you adjust your budget so that it can cater for your basic essentials that you need to survive.
So I think starting off with the budget, it was quite a critical time in which the lockdown was announced. It was just announced before the people that get paid on the 25th were paid. The people that unfortunately probably got paid on the 20th had already spent the bulk of their salary, because as we all know, a typical person that get a salary, it takes them 5 to 10 working days before they can deplete their salary. The rest of the month is just basically money that's put aside for fixed costs that needs to be incurred before the next cycle starts. So the people that were paid on the 25th were on spot on, and the people that were paid on the 30th unfortunately had to go shop around after the lockdown was already implemented. Certain shops were already closed. The shops were minimizing the number of people that could go in shops. So what ended up happening is people were doing panic buying. When like people are now going to shops and stocking up, especially non-perishable food like your dry food, your tinned food, and your essentials like toilet papers, etc. So which means that if you are a person whose budget is very tight, you either had to get money from your savings to be able to accommodate this extra spending, or you need to cut on savings to accommodate this extra spending.
I'm just going to emphasize, I know it might look like it's too late to talk about people should learn to have backup savings for emergencies, but this COVID-19 is at the end of the day, we should learn something out of it, that we should really have this backup saving, because as we know, with so many employees, some of them, if this situation continues for more than 3 months, unfortunately, companies will not be able to pay salaries.
And that's a reality that we all need to face, and we need to start the conversation some way. Don't wait until your company tells you, unfortunately, we can't pay salaries for the next... It only makes business sense. So if the cash flow isn't coming in, where do you expect companies to get money to pay salaries to come 3-4 months down the line? Yes. Okay. So personally, I had to also do a bit of panic spending, and I kind of had anxiety spending, because let me rather say I didn't spend. I sent my fiance to spend because I have anxiety spending. I just can't afford to. I can't swipe unbudgetedly.
It's almost like you get that, like you almost want to stop the machine and say,
"Who?" Like stop, like it was like so.
Because it's not your norm.
It's not in my norm. I go on a spending spree now and then, but it's not typical of me to just go and squander money on food, if I can call it that way. So my budget for food was almost twice what I normally spend, and it's because we don't really have a lot of people. I don't live with a lot of people, so I normally buy things that are only enough to last me a month. And now, and I didn't panic when COVID-19 came around and when people started doing panic buying, and I went to do my shopping just as business as usual, and my fiance came by and saw the amount of food I bought, and he's like, you are not gonna survive. You need food enough to last you at least 3 or 4 months. And I was like, I'm not doing that. So he eventually ended up doing the shopping for me. So I ended up spending in total, out of this corona, if I add it together, I ended up spending in total for myself, I ended up spending 3,000 and something. And then I also had to then I started panicking, if I'm stocking up this much, how about people that live with other people, like my mother and my nieces and nephew and cousins, my grandmother. So I ended up spending like 3,000 and something for myself. Don't remember the exact number. And then I had to send my grandmother, because I was also panicking. If I'm running out of food, that means my grandmother can also run out of food. So I ended up sending my grandmother 1,500, and then I had to send my mother. So I think in total, because of this corona fear, I'm clocking about 6,000, 7,000 on food. But it's not my own. It's not my own spending. It's my spending plus the people that I care. Because at the end of the day, how I got comfort with the spending is that my fiance is like, if you don't spend now, you might have the money, but there will be a time where you have the money, but there isn't food.
So in our situation was, we live 3 at home, and when people started panic buying, it was around about from the 20th. So none of us had money at home. But on the 25th, I get paid. So I get paid earlier. So I had to spend around about $3,000 so that we can stock up on essential things that we need, and then the rest, like meat and so on, can be stocked up, which is the 30th when the rest or the 31st when the rest gets paid. Because we did so because even now, as you see, people go to the shops and they stand in long queues, and you're only given 10 minutes to be in the shop.
True.
This actually means that 10 minutes is only enough for you to go collect maybe milk, bread, and so on. But if you're only gonna, the government keep telling us that we shouldn't panic shop and all this, but I really don't see that it's a wrong thing, because when you go to the shop, you're only allowed 10 minutes into the shop, and that's it. With that 10 minutes, you can't stock up enough food for the month for the family. So for those that had time to stock up food earlier, I won't say it's a reckless buying, or it was drawn out of proportion. I think it was a wise buying. One thing we should also look at is some of these people that say that we shouldn't panic buy is people that should look at their pockets. These are people that always constantly have money, so when for them their shopping is just to stock up food that is non-perishable, that is perishable food, like dairy products and meat and things like that. Because to be honest, there are people that beginning of January, you already have that big sack of rice, big sack of macaroni. But for us that lives on every month, you have to do your monthly shopping. So the panic buying was necessary
kind of
for
thing.
us.
Because if should it be prolonged for another month, that means you'll be out of food and potentially out of money. So it wasn't too much, but my advice or my urge to you guys is don't just panic buy alone. Panic buy and think people who are close to you. You might be panic buying, but how are people in the village gonna survive? And you need to be buying obviously essential and comfort food. I saw a video going viral of a house being stocked up, and majority of that is like Nutella and this luxury food, which is fair, because my fiance also went and came back with Doritos, speckled eggs.
Yes, my dear, we had to go on a we had to go on a whole snack panic buy also. But it's really a good point that you mentioned that you have to cater for yourself and the ones that surround you that will be in need, because it doesn't help you are sorted and then your family members are not sorted. So
moving on to the next point now. After you've sorted yourself out, the bigger picture. So the first thing that the government did was to reduce the repo rate, and they announced that the repo rate is going to go down with 100 basis point, which is equivalent to 1%. And the banks, the commercial banks, were also given a directive by the central bank to say that they must also put reduction in effect immediately. So what they've done is they've gone and reduced all the loans that were linked to prime. I don't know if it's in this video where we spoke about, it's an article I wrote, I'm not so quite sure, where we spoke about fixed and variable loans.
No. You wrote about it.
Oh, so I wrote about it. So basically the banks only went and adjusted loans that were linked to prime. So if you were given a loan that has a fixed interest rate, unfortunately when prime reduces, you don't get the benefit. The only people that get the benefit are people that get home loans and mortgage and car loans that are linked to prime. So you should be seeing that the
prime rate went down to 9% from 10%, in the home loan rate went from 11% to 10%.
And for a lot of people that means that your home loan, your monthly payment would have gone down, because I think I've saved around about 200 with the initial reduction, because there was also another initial reduction that was done not long ago. So this is the second reduction that is coming through. So I used to pay something 900, now I'm paying something 500. So you can see there's a kind of a significant decrease. So that is actually just to help help the consumer have more disposable income at the end of the day. So what we want to actually talk about today is actually this whole thing of debt holiday,
repayment holiday, or mortgage suspension,
or debt moratorium. So what is actually happening in some country, because the impact of corona is so severe, central banks have instructed commercial banks to issue debt holidays or debt moratorium or debt suspension to their clients. But in Namibia, it's not an enforced thing. some banks are doing it, but it's for specific client. Some banks are doing it for but you need to apply for it, and some banks are not doing it at all. So you need to be informed in which category you fall, and we just want to explain to you what it actually entails before you go and jump at the option of a debt holiday.
So first of all, let me take you through what is actually a repayment holiday or debt holiday. So a repayment holiday or mortgage suspension is actually is defined as a break from your usual payment for a specific period of time.
Basically, the banks have defined the period which they are kind of looking at giving people holidays for, but it's actually within the ambit of what the central bank has kind of regulated. The central bank issued out some, I don't know if it's an official circular or it's just a directive or a notification to the media that the commercial banks can, not must, they may issue debt holidays to customers. They must do it in a transparent and a fair manner, and it can vary between 6 and the maximum they can give someone is 2 years. But obviously, you can play around with anything between 3 to 24 months.
Okay, so in layman's term, like in simple English, what you're actually saying is this whole fancy name of repayment holiday is just to say that maybe you feel like you're affected so much so that you are unable to pay your debts, like your mortgage. Then you can ask the bank or request them to at least not let you pay for 3 months or 2 months, depending on how long you think you are going to need this holiday. This one thing I also want to elaborate is that this repayment holiday is not a new thing. It's not a thing that was come up with that was created just because of the whole COVID-19 issue, but it has always been there. It's just that you would go to the bank, and then you have to go through certain criteria, and then the bank will have to decide if they can grant you or not.
And even now, it's not like I'm saying in Namibia, it's not enforced by the central bank. The banks are allowed to, but they're not compelled to. So even now, you have to go fill in an application form. They need to do a thorough assessment. Are you able to still continue to meet your commitments? And in an event that you are unable to, that's when they can consider you for a payment holiday. And we just need to explain to what a payment holiday entails is the banks will normally say, we are not going to ask you to do any payment within the next 3 months.
Yeah, and this payment that we're talking about, sometimes it can be tailored to your own needs, because when you do a repayment, you do a capital and interest. So you can either decide that you want to be exempted from paying capital and you can still pay your interest, or you can be exempted from paying your capital and your interest, or you can pay your interest and get exempted from your capital.
Or you can do either. But what we actually want to put across is that most of the banks, if not all of them, are suspending the payment, but they're not suspending the accrual of the interest. So which actually means that your loan, your capital outstanding plus your balance outstanding come the expiry date of your payment holiday is going to be more. And you need to understand that at some stage, it's actually a relief for a period of time. They're not going to say, sorry, this 3 months will just miraculously disappear. They are deferring the payment to go into the future. So unless you really need to take this because you are unable to meet your debt, please consider trying to fulfill your loan commitment before you jump to the payment holiday.
Or try to decrease your capital, your monthly capital.
Yeah. Or you can say to the bank, look, I am struggling. My salary is cut by 20%. So may I also get a reduction in 20% of my premium so that I can still save this? And then when my salary goes back to normal, I can catch up the 20% that I wasn't paying in the last 3 months. And what we've also noticed that municipality has also given a similar relief to clients who were behind with their municipal bills. It doesn't mean that post-corona life is just going to resume as normal. Post-corona, you still need to go back and look
at whatever amount was in arrears from municipality, plus now the water, because municipality is still gonna come and see how you have been using the water, and that whole interest is going to accumulate. I believe it doesn't mean that no, this whole period of maybe 3 months since it was the corona era and whatnot, no one is gonna pay for this water. We are all still gonna pay for the water. So if you have the means, especially now, some people will maybe be of the impression that now they feel like they are going to neglect their obligations so that they can benefit from this free ride of every water is available for everyone and no one's water bill is going to be cut. But if you can pay for your debt, why would you rather wait? Why would you wait? Because first of all, they are going to incur interest on this, and even though they are not going to cut the water, there will still be a reconnectivity fee.
Most probably.
We
don't. There's nothing as free lunch.
Nothing is for free in this world.
So at some stage you need to go and pay for this. So you need to really think. So that's what we're just trying to get across, that they are gonna suspend your capital. They are gonna suspend your monthly payment, but they're not suspending the underlying interest, except in specific instances.
Okay, so let's look at what does this repayment holiday really look like. What the bank is saying is that let's take a typical example where you had maybe a loan with a bank and you currently owed 270,000 that you need to pay off, and your monthly installment, let's say your monthly payment that you always do is a $5,000 installment. So you say you're going on a debt holiday for this 5,000. Okay, so now you go to the bank and then you now get this exempted from paying this 5,000, which is your monthly installment. Now come the second month, for the first month, maybe let me say this current month, come April you need to pay your installment again, and you maybe told the bank that you are not going to pay it for 3 months. Now in April you no more owe the bank 270,000, but you now owe the bank 275,000, which is the 5,000 is the previous month's installment that you didn't pay. And then now the bank will have to come up with a new interest.
The bank is now going to recalculate the interest based on the balance outstanding,
which is the 175,000 when
it could have been
on 265 minus the 5,000
that you would have paid. So ultimately your installment gets higher because your balance outstanding at each month is just accumulating instead of it reducing
for the 3 months.
So ultimately you're not going to get away with the problems. So the moral of the story here, unless you really, really, really have to, don't go for the debt holiday. And as currently as it stands, a lot of people are not yet affected
because this even just means that after the 3 months, when you come back from your holiday, you are going, your monthly installment is no more going to be at 5,000.
Because unless the bank is willing to extend your loan term, which unfortunately I don't think that's gonna happen. So they need to adjust your monthly installment so that you will still be able to pay back the loan within the agreed time frame, except if you can obviously negotiate for a term extension, which is another assessment on its own. So that's what we are trying to say here. And then, so we just wanted to highlight a few things that I think some of the banks in Namibia that are now did to try and respond to help their clients that are affected.
So we are just trying to spread awareness for those that might not be aware of this changes that the bank made or this provided for them. Okay, let's look at what Standard Bank is doing. Everything that we are going to share here is everything that we took from the Standard Bank Facebook page or from the individual banks' Facebook pages. All this information is available there. It's also available on Twitter, Facebook, and I believe Instagram. So this is information that is already known to be out there. We are just informing the nation, those that haven't stumbled upon this information, and you're finding yourself in these difficult situations and you don't know if there's a way out. So Standard Bank is actually offering capital and interest repayment holiday up to 12 months for the Tourism Association, and it ends on the 30th of September 2020.
So ideally, this is what exactly this is if all the banks were saying we will suspend interest plus capital, then by all means go for the debt holiday, because that means it's almost as though life goes on hold and then you resume life after the coronavirus has ended.
Just because of the fact that they're suspending the capital plus interest.
But what you must understand is that they are not doing it blanketly to everyone. They're doing it for their clients that are in tourism. As we all know that tourism is almost close to doing zero business because there's international travel bans. guest houses are associated with tourists. No one really wants to spend time in the guest house, so there isn't much happening. So if they don't do this for their clients, it's gonna force most of them to go into business rescue or even liquidation for that matter.
Yeah, and for their small and medium enterprises, they are offering capital and interest for the period repayment holiday for capital and interest for the period of 6 months. And yeah.
Okay.
For the small and medium enterprises.
Okay.
And this, they said there's a trick. It's for businesses. How do you define yourself as a small or medium enterprise? Is for businesses with a turnover that is less than 10 million.
Yeah. But typical, this is your businesses that are still growing and they don't have reserves or they don't have funding available. For your big businesses, even if the struggle is gonna hit, most of them, they are part of a complicated group structure, and your holding company can come through for you and try and give you an intercompany loan that you can pay back when things resume to normal. But for your small and medium businesses, there isn't that sort of support happening. That's why they are kind of like offering this support to their client to try and keep them going.
Okay, so they also went as far as to charging 0 interest on student loans.
Yeah, and then again, us them charging 0 interest is almost saying life is gonna go on hold, then you're gonna resume. For as long as there is 0 interest involved, then
you're good to go.
You are good to go.
So actually, Standard Bank's clients are good to go. You can actually afford to go on this.
Yeah, you can really afford to go on this, but unfortunately, it's not a blanket option available for everyone. You still need to apply for it. They still need to
you still have to get in touch with the bank.
Yeah, and do a thorough assessment. Like, for example, if I had to go back to go to the bank now and say I wanted that holiday, I'm probably not gonna get it because my salary wasn't affected as of this month. But maybe if things happen to change in future, then you can consider going there.
Well, moving forward, as for F&B, they really didn't say that much on the repayment holiday. Maybe that's arrangements that needs to be made. You need to go to ask them or to apply for this repayment holiday. They only emphasize on the interest rate, the prime decrease and the home loan decrease.
Yeah, and we all know that it was a Bank of Namibia directive to all the commercial banks to actually adjust their prime lending to their home loan lending rates accordingly. So they are just saying, communicating to the nation that yes, they've indeed given the customer or passed on to the customer the benefit of 100 basis point reduction in the interest rate.
Yeah, unless maybe F&B is going to look at this video and try to change their mind after this. Try to follow in Standard Bank's footsteps. And as for Bank Windhoek, they said that they're not offering a blank repayment debt, meaning they are being specific that it's not going to be imposed. You don't just say that, oh, the bank, it said that we are going on this repayment holiday, so yes, I'm obviously already on it if you are with Bank Windhoek, because they said that you have to go make arrangements for you to benefit from this.
And I think lastly, it's Nedbank. They haven't also been explicit what they're gonna do and what sort of relief they're gonna give to the clients, except mentioning that they've also passed on the benefit of the reduction in prime to the customer. So I think that's what we wanted to bring across to you guys today. We just wanted to reach out and be informed, and at this point in time you really want to try and kind of safeguard your liquidity and safeguard the cash reserves that you have. We don't know how long it's gonna last. China has been battling with COVID-19 since December, and we are in March now. A lot has been on standstill. We can expect challenging times ahead, so other than panic buying and stocking up on food, you must really try and conserve the food that you have. If you can do like some of us, please do panic planting, because in 3 months time you might have a spinach growing that you can use instead of going to buy new tomatoes. I'm just saying. But anyhow, be realistic. And one of the things that you can kind of look at right now, if you are looking at taking on a capital project, like maybe buying a new car, starting to build a new house, you might want to put that on hold and see how the economic events are gonna play out before.
But I can see, I can imagine someone trying to go buy a new car because of this whole. Yes, there's now a reduction in prime.
But the reduction in prime isn't look, economic indicators don't just flip around overnight. The reduction in prime would be even needed post the COVID-19 for the government to try and aid the businesses to recover. If we just decide it's not, COVID-19 is over today and we're going to shoot up the interest rate, it's going to try and wound the sick already. So you need to kind of,
because businesses have to be allowed a certain period of time to get back onto their feet again.
Yeah, so if you are looking at buying a car, the bank, rest assured that the interest is not going to jump overnight. So you will still have time post corona to decide whether you really need to take on that new project or not.
But since we don't even know how people are doing in their pockets, so you just do whatever suits you. We're not trying to say that we are becoming financial advisors, because remember, we are not certified financial advisors, but we are just stating out facts and giving opinions and our suggestions. So that's it from us today, and from me, Mamsi,
and Kele,
it's
goodbye.
bye.